I'm at REIT Week 2010 in Chicago, and I'm joined by David Nethercutt, President and CEO of Equity Residential. David, how are fundamentals looking in the sector?
Fundamentals are looking terrific in the apartment sector today. We are in a period of very strong recovery, actually. We found the bottom of our business in the middle of 2009, began to see our occupancy grow in the fourth quarter of 2009, have seen that continue. Portfolio-wide, plus 95% occupancy. Our rents are up significantly. Really, our rents are up high single digits from January 1st of 2010. I think what we're seeing is the recovery of the discount that we gave our residents over the last several years during the Great Recession.
You mentioned rents are recovering. What about the supply-demand picture?
The supply-demand fundamentals for our business could not be better. There's very little new deliveries being made today, and absolutely no new starts a year ago, and very little new starts today. So from a pure supply and demand standpoint, given the demographics, given the strength of that echo boom generation, plus 80 million kids strong, the number of kids graduating from college every year. I mean, we're going through a period of time where we've got more than 4 million kids a year turning 18 years of age in this country. Household formation is very strong, and on an absolute supply basis with very little new starts and very little new construction lending being made available to developers, the fundamentals couldn't be better from a supply and demand perspective.
And Fannie and Freddie are obviously vital to the residential sector. How could reform of the GSEs impact not only Equity Residential but the sector as a whole?
Well, they certainly have been important to the sector, the multifamily sector. They are less important to the well-capitalized public REITs. I mean, we do have access to the senior unsecured markets, but Fannie Mae is a very important, Fannie Mae and Freddie Mac rather, very important players in our space and very important business relationships with Equity Residential. I think it's possible there could be some reform, but I don't think it's I don't think it will occur in the very near future. I think it is somewhere down the road. They continue to be very active in the multifamily space. They've assured us that their goals remain fairly consistent this year as they have in the past. It's their only profitable line of business today. As the government becomes more and more focused on the benefits of rental housing to the American people, I think that they will continue that support.
And you seem very positive on where things are going in the sector. Obviously, you mentioned how strong fundamentals look. Is there any other trend that has you so optimistic?
Well, I guess I say my optimism is a result of what we've seen lately in the recovery. So, right, we did give our residents a 15% to 20% discount on their rents several years ago, and those of our residents that have remained employed got a very nice discount, and I think it's only appropriate that we begin to earn that back. The optimism, I think, to go beyond that recovery will really need job growth. Obviously, the job picture is not as strong as many might like. Most of the new jobs that were created in the last survey were census-related jobs. There's some question as to what kind of job recovery there is going on out there. It would not surprise me at all, however, if there was really more job growth than what the government statistics were suggesting. Past research has noted that nearly two-thirds of the job growth that occurred in the last recovery were from companies that owned fewer than 100 people, rather that employed fewer than 100 people. And I think that it's difficult for the government surveys to kind of pick that up. And I think that when those numbers are revised 30, 60 days down the road, I think they might show a little bit more employment. But clearly what we need is employment to be able to take this recovery and really power back through the previous high water marks. And I don't think there's anyone who doubts that the 2011, 2012, 2013 sort of time frame with a little bit of job growth could be some of the best years of fundamentals the apartment business has ever seen.
Great. Well, David, thank you very much for joining us.
My pleasure. Thank you.
For REIT.com, I'm Matt Bouchard.